Everybody, welcome to another geopolitical analysis video. We are diving into the markets. I want to take a look at Bitcoin with you guys because I do see here a bullish side to Bitcoin. So the past few weeks we've been just chopping here within the range of this large, as you can see, green bar. We had this magnificent drop, beautiful discount for those who want to buy this asset, beautiful green bar. And whenever we see this chop within the green bar space, you know that this is just an accumulation zone. And if we connect the dots here, then we quickly get the image here of a bull flag. Bull flag, especially when it has surpassed 50% of the previous red candle, is really high in terms of chances of being played out. Typically, when you see an engulfing candle, that means a reversal is happening. But in this case, we're seeing the opposite. We're seeing that this candle here, okay, in terms of height is longer than the red candle, and it has surpassed the 50% of this red candle, meaning that when this accumulation is done, we should see further upside. Okay, so this is a beautiful telltale sign that we are aiming higher. Now, I'm not talking about a bull market. I'm not saying that Bitcoin is going to all-time highs or anything like that. I'm being methodical. I'm looking at short term, and I think that we could see Bitcoin reach the 70,000 zone, 74, 79,000 zone. Now, if we accumulate here or surpass this, I can see us going back to 80 and even 84,000. So I do see a possibility of us reaching this level. How and why? Well, one of these symmetrical plays that you can use is this here. So you take the height of the bar that we're seeing the accumulation fall under, and as soon as you connect it, the symmetrical side points up close to 84,000. So this is a healthy range. I would be buying here. I've already bought. I mean, I've been buying from 72,000 down to 60. I put significant chunk of change into this. I'd be happy with a 20-30% increase because I do think that after we see the bounce up, I think we're going to see a trap and we might head lower to the 49,000. But that will also coincide with what's going on with the market. So let's take a look at the SPY over here. We're seeing that whenever we're testing these lows, we're bouncing and we're having a decent bounce. Now, we know that the data came in was negative for the economy, but also the whole tariff situation with the court ruling against the IEEPA method of adding the tariffs in imposing those. So a lot of things are going to play out. I think it's going to be political, but at the end of the day, the markets don't seem to me to be breaking down significantly yet, although there is the fear. We haven't seen something yet to short. I'm not shorting the market only because when you do short the market, you typically will have a long way to play that. Okay, if the market's going to crash 40%, you're going to see the signs of it. We're not seeing that. We're seeing weakness, sure. We're seeing a rounding of the top, like I mentioned, redistribution to retail from larger plays. Like retail is not dropping here. This is massive money. Over here, though, the smaller candles, it's probably retail playing out. And Friday is probably heavy loading up from bigger institutions. So let's see about the markets. I'm neutral here, neither bullish, neither bearish, same as the NASDAQ. With the Russell, I do expect something to come out of the Russell in terms of a move to higher prices, only because we've seen that interest rates have decisively come down. And I expect this bounce here. It's a normal bounce, but we should see, and then following week, heavier selling. I'll do a separate video on that. I hope you guys enjoy this. Gold is looking upside. I'm bullish still on gold. I think gold has not topped yet. Although I did sell some of my positions Friday, I took some profits there. I do see gold going up much higher, and it will depend with Iran too. Like, I don't want to say that it's going to depend on Iran necessarily. I think that a lot of this is priced in already, but the conflict could have a positive in for different trades. Sometimes markets get a fuel and a kick out of war because war is very profitable in some sectors. Sometimes it doesn't. Sometimes commodities play out positively. Sometimes they don't. So this is going to be interesting. I want to see where we progress. But that's all I got for you guys. I hope you enjoyed the weekend. Bye for now. Thank you.